Are you guys still with me? Is everybody back into the room? Thank you very much. Like I say, I'd like to apologize for the boo-boo. All right. At the beginning of the week, on Tuesday, we knew that Donald Trump has reinstated back the tariff that he held uh, on pause for a month. And he says that the tariff on Mexico and Canada will be on time. You need to say that comes on March the 4th, it will be reinstated. And definitely, this is not a welcome news for both Mexico and Canada. And on top of which, he has been very busy. He has also imposed an additional 10% tariff on China. We'll come to that later on. Now, the first data that came out this particular week, this past week, has been retail sales for New Zealand. We can see that there has been a marked improvement in retail sales. Previously, it was negative 0.1, and the retail sales has pointed to a possible recovery. The number that came out was actually very, very good, and it was 0.7%. So this is definitely a good news to be welcome for New Zealand. And in Australia, we can see that the CPI numbers has not really budged. You can see that the monthly CPI numbers year over year remains at 2.5%, and this is not getting worse, but at least it is holding at 2.5%, which is within expectation. And over in the States, we can see that the GDP estimates for Q4 remains at 2.3%. This has not changed. Based on the data we have received so far, it does appear that Q1 GDP for this year may be a little bit lower, perhaps about 1.7%. So we will have to see the actual number when they release the Q1 number after the first quarter is done. Okay. Then, of course, earlier on I did mention the Trump has also imposed a 25% tariff on EU goods. Now, this come on the back, actually was announced the day before the dramatic meeting between President Zelensky and President Trump, which has been very undiplomatic to say the least. But it does show that there has been a split and a crack in the European alliance with the United States, and definitely now we are beginning to see the fallout. And this tariff imposed on EU is not going to be able to make things better. So I think definitely right now we are seeing a historic shift in the balance of power. We can see that Trump administration is definitely trying to distance itself from the ongoing war in Ukraine. And we can see that there was supposed to be a deal between Donald Trump and President Zelensky on the sharing of minerals in lieu of paying down the supposedly $350 billion loan that the US extended in aid to Ukraine over the last 3 years. So right now there is no deal, and definitely the Europeans are also very keen in pursuing a similar deal with Zelensky. We'll see who will get the deal done first. And in the meantime, we also understand that there has been a meeting at 10 Downing Street in London. The Prime Minister of UK is currently hosting President Zelensky with some of the major European Union heads of states, and they are trying to figure out how to respond to Donald Trump walking away from Ukraine. So this is definitely something that we will have to watch very closely, because the rest of the major European nations does appear to be wanting to continue the war in Ukraine, and they did mention a few things, although nothing has been finalized. But it includes sending troops to Ukraine on top of sending more weapons to Ukraine. So if the European troops actually land in Ukraine, that will actually escalate the tension, and there is a possibility that this war may escalate first before cooler heads can prevail. So going into the this year itself, there is the prospect of the situation in Ukraine getting worse, and that could have severe implications for the rest of the world. Okay. Then we have the additional tariff. Now, this is on top of the earlier tariff that Donald Trump has actually imposed on China. So this is on top of that, okay? The additional 10%. Now, this is on top of what the existing tariff has been around since 2018, and President Biden did not remove any of those tariffs, and now Donald Trump 2.0 see an additional 20% tariff on top of the existing tariff on China. And China is going into a meeting this coming week, and we should be keeping our ears open as to how China is going to respond to this escalation in this tariff war. Okay, and of course, Donald Trump, being Donald Trump, he's saying that the flow of fentanyl was the reason why he's imposing additional tariff on China. So what we can see here is that Donald Trump is using economic leverage or to achieve an outcome for something totally different. Okay, so he's using fentanyl as the excuse to impose tariff on China, and we will have to see how China will retaliate. China will retaliate as we have seen. China has actually restricted the export of rare earth and certain minerals, and on top of that, the latest has been the imposition of restriction on the export of tungsten. Now, tungsten is a major critical mineral that is used not only in industrial practices, also in military and weaponry. So we can see that China is hitting where it hurts. And that's the reason why Donald Trump has been very, very keen to take over Greenland, which supposedly has a lot of rare earth that the United States needs for their military, as well as he wants to basically seal up the deal with Zelensky on the extraction of rare earth in Ukraine. But all this will take time because it will be from the day you actually get the agreement going, there will be a lag time in terms of exploration and, of course, the refinement of all this rare earth into useful minerals. So we will have to see how things unfold, but it does not look good on the tariff front because Trump has been in office for slightly over more than 30 days, and we can see that his impact is larger than life. Okay, so we have to see how things unfold in the days and weeks ahead. Now, the next number that came out on Friday was the inflation story in Japan. You can see that inflation has dipped back as far as the core CPI is concerned, which you can see on the chart there, which is represented by the red line. It has dipped back to 2.2%, and this has maybe put a little bit of a delay in the expected Bank of Japan hiking interest rate. But I think Bank of Japan has already made up their mind that they will be hiking interest rates perhaps to 1 whole percentage point by the end of this year. So we can see currently, we can see the inflation month on month, okay, has actually dipped. This is also true for the headline numbers. Previously was 3.4%. Now the latest number for the month of February was 2.9%. So we can see inflation pulling back a little bit, maybe delaying the inevitable Bank of Japan's hiking interest rates. Okay, so we will probably have to watch this. The next BOJ meeting is on May the 1st. We will have to see. Okay. And in Germany, we are seeing retail sales rebounding. So this is again a very good sign starting from New Zealand. And now we see Germany retail sales has bounced back up to 2.9%, which is very, very good because the previous month was 1.8%. And definitely this is showing us that perhaps at the retail level, Germany may be recovering in terms of consumer expenditure. But we will have to see because that could be again buying ahead of the expected Donald Trump's imposition of tariff. So maybe the Germans are buying ahead of time just to make sure that they get what they need before before the X falls, okay, so to say. Okay, so we will have to see again what happens. Germany's CPI numbers has been benign. We can see that the month-over-month number for the month of February has remained stable. Market was expecting 0.4% and it got 0.4%, although that number is a lot higher than the previous number in January of negative 0.2. Say, when we look at the year-over-year number, it remains very stable at 2.3%. And the harmonized index of consumer prices year on year, which is another set of inflation numbers watched by the Bundesbank, remains stable at 2.8%, although the market do expect a tad lower at 2.7%, but it was stable for both January and February so far. So this is the current situation. Inflation seems to have eased back a little bit. Retail sales have picked up, so it could be a good sense that maybe there is a little bit of growth going in the German economy. Now, for Canada, we can say that the GDP Q4 has been revised higher. We can see that the Q1 was actually 1%. Now they revised it to 2.2%, which is doubling of what we saw during the last estimates. So there has been a major boost. We can also see that the GDP for Q4 remains elevated at 2.6%. Of course, this number will be subject to revision, if any. So, but based on the Q3 revision upwards from 1.9% to 2.2%, this is definitely a very welcome sign. So it does appear that all things being equal, from New Zealand to Germany to now Canada, we seems to see that the economy seems to be stabilizing and even growing. Okay, and this the highlight for the week itself. We have the core personal consumption expenditure, which is the Federal Reserve favorite inflation gauge. Okay, previously in the month of December, the number was 0.2% month over month. Market expected 0.3, and that's what they got at 0.3. So we can see inflation has ticked up a little bit. Then on the year-over-year number, which is the major number here, we do see a dip. In December, it was 2.8%. Markets expecting 2.6 for January, and that's what they got again at 2.6%. So, okay, we have a bit of a mixed bag here. On a more immediate future, we can see that inflation has ticked up marginally, whereas on the year-over-year number, it does appear to have slipped back somewhat. Okay, so it's a mixed bag of number, but again, we will have to watch how the Federal Reserve is going to react. But most market participant has already expected the Federal Reserve to keep interest rates on hold as they await more data before deciding. So this could be what we are witnessing right now. Okay, now this is the basic summary of the PCE numbers. We can see the market expecting stripping out the volatile food and energy component. We can see it has gained 0.3%, which is what we are seeing on a month-over-month basis. Year-over-year, we can see it's climbed back to 2.6% after climbing to 2.8% in December. So there is a bit of a revision there, revised upwards. Okay, so we will again have to watch. Now, China yesterday morning released their PMI, which is the NBS, which is another set of PMI numbers. Manufacturing come in slightly higher. Previously, for the month of January, it was 49.1, which is in contraction zone, and 50.2 definitely shows that it has improved. The non-manufacturing, meaning to say the services sector, has also been a little bit better. Previously in January, it was 50.2. Market expects slight improvement at 50.3. It came in at 50.4. So it's all good. Whether it is manufacturing or non-manufacturing, we can see that China economic activity has improved slightly. Okay, so I just want to bring to your attention, there will be a on-location seminar for 2025. This will be my first seminar, again sponsored by IronFX. It will be held in Kuala Lumpur. The date will be on March the 9th, which is Sunday. It will start in the afternoon at 2:30 and ends about 6 p.m. And what I'll be covering will be, again, giving you an overview of Trump's first 30 days, okay, in office, and what he has been doing and how his policy is impacting markets. And of course, I will also cover a little bit on what may actually happen to the geopolitics in Europe, and which will have a immense impact on financial markets. And I'll again will be sharing with you one of my basics from foundational methodology on how to find market directional buyers, and that will be followed by a live trading the following evening on Monday on the 10th. That will start at 7:30 and ends at 9:30. And of course, I will be showing you in live environment how I take the concept of finding directional buyers and how to execute those methodology in a live environment. So if you are keen, and if I'm able to travel to Kuala Lumpur, do make that trip. It'll be worth your while. And the location is most likely to be at Dorset Hatamas. And this is, of course, not confirmed just yet. As the date gets closer, that will be announced. And if you are keen, there's a link here in red. You can register this link. You can take a snapshot of this slide here. If not, you can take take a snapshot of the QR code over here on the right, and do register if you are keen to come. And of course, if you are going to bring somebody along, or you believe somebody may benefit from such a session, you're more than happy to register them as well. Okay. But whatever the case, do register ahead of time so we can get a sense of the head count, so that we can decide how big a venue we must actually allocate. Okay, then this is something that I want to do, and I'll be doing it maybe every quarter. So with the sponsorship from IronFX, I hope I can do this on a more regular basis. So this time will be in Kuala Lumpur. Next time, I do not know where we will be. Maybe it will be somewhere else. Okay, but I think we will be concentrating in Malaysia for time being. Okay, so I hope you have taken a snapshot of this slide with the QR code or the link here in red. Okay, this will be the registration link. All good? If you're all good, then I will move on to the chart itself. All right, this is the chart on the IronFX MT4 here, which is the MetaTrader 4. And as usual, I will start off with US equity markets, starting with the Dow Jones. Now, today is the start of a new month. So again, I will showing you the monthly chart to give you a sense of where the market is heading. So we can see that the Dow did attempt to break out, but it did not fail. It failed to take out the all-time high. So we can see the all-time high here is uh, 45,078 on this platform here. This high here that we saw in the month of February has been at 45,049. So it did not quite break the all-time high, but we can see now it's forming four tops here. On the monthly basis, there has been three other attempts to break out of the all-time high that we saw here. Okay, and this is something that we have to consider. If market cannot break out, it will likely invite a lot of profit taking, which could be the case in which we are seeing this past week. Okay, so this is the monthly outlook. It remains very, very bullish. So I think the market has been going up quite strongly since March of last year, and it may be time for the market to actually pull back a little bit on profit taking. The fundamentals has not been great of late. We can see the Magnificent Seven, which has been driving markets higher last year. Now it seems to be lagging behind the overall market. We can see that despite Nvidia reporting a stellar earning reports for last year, but we can see that the stock actually went down by 8% after the the earning report was released. So we can get a sense that the market right now is a little bit lethargic right now as far as tech stocks are concerned. So, but again, we want to see how the geopolitics pan out in Europe, because we are also beginning to see that the situation in Europe is not getting any better. Promises of an early end to the war has been scuppered. The Russian and the Americans will be meeting again. I think right now they are meeting in Istanbul, okay, in Turkey over the weekend. Not sure whether that will lead to a summit in which both presidents of both nations may actually meet for the first time. But Donald Trump is going to do this alone without consulting his European allies in the NATO, and definitely have no participation or input from Ukraine. So I'm just wondering if a peace deal, even if it can be struck between President Trump and President Putin, may not be lasting because it does not have the support of the other key players. Okay, so that means if from now until a peace deal is done, is able to be materialized, okay, something else could happen. And I get a sense that the Europeans are itching to go alone and escalate this war that is ongoing in Ukraine. They have been giving Ukraine a lot of false hope that they can actually win the war, whereas we can see that on the ground itself, Russia is definitely pressing in. and definitely has escalated their strikes in and around Kiev, which is the capital. So we can see that the war is not getting doesn't seem to be ending soon. My fear is that the European on their own will escalate, and there are unsubstantial reports that UK have actually sent material for building a dirty bomb to Ukraine, and that will be a dire development. Okay, of course, it has not been substantiated or been reported in the other medias, but I'm beginning to hear that there is the possibility that UK is trying to force the hand. Okay, so if this actually result in escalation directly between members of the NATO members in Ukraine and Russia, that would mean an escalation. And we are really beginning to see that happening in the gold market, in which we have been seeing gold has been moving from Zurich, from London, and even Singapore to New York by the plane load. So this is a sign that capital is fleeing ahead of a suspected and unsettling prospect of an escalation of the war. So just be aware that we are in that period of time whereby war does appears to be the war drum seems to be getting a lot louder than before. Okay, so just be aware of that. And if something like this does happen, it's going to negatively impact all markets, okay, except for gold and perhaps even Bitcoin. Okay, so right now we are seeing that Bitcoin also have a big week this past week. We will come to that later on. But by and large, you can see equity markets has been struggling as far as the Dow is concerned. Now I'll show you the weekly time frame. So this is the weekly time frame chart of the Dow Jones. You can see that the market did not quite manage to clear the previous high here at 45,478. The high traded this past round has been 49,061. This week is at much lower, okay, at 43,883. Okay, so we can see that prices are not going higher, but the Dow managed to close slightly on a positive note on a weekly basis, but it's only tentative. Then on the daily time frame, which is more crucial, we want to see if there's any sign that a market may be due for a massive turnaround. Okay, here we have the daily time frame. You can see that the market sell off quite aggressively the week before, and this week on Friday we have a major recovery. So we will have to see whether this recovery here marks the end of this downturn here. Okay, but by and large, there is that counter trend in place. Overall trend, the dominant trend remains very, very bullish. Right now, it does appear that we may be in for a period of consolidation. So a pullback over the next few months is likely to be the case. Unless there is extraordinary events that happen, it's very unlikely, technically speaking, we will be seeing a challenge on an all-time high anytime soon. Okay, but I could be wrong, but I think the market is gunning for a consolidation or at least a pullback. Okay, so this is the Dow Jones. I want to show you the S&P 500 on a monthly basis. We can see the where's the monthly basis? This is the monthly basis. We can see that the S&P 500 has been a lot bullish. Last month, we have a brand new high at 6,147.2, and the market closed only marginally better than its opening at the beginning of February. So it didn't close on a very, very strong note. In fact, it closed as a doji, which is a sign where the market is undecided which way to flip. Okay, so this is the monthly outlook, and it does appear to be still holding on to the very bullish trend. Okay, so by and large, the dominant trend remains very, very bullish. So if you are going to do counter trend, just be aware that the underlying tone is very, very strong. Okay, so this weekly time frame here, we can see 2 weeks in which prices has actually managed to close lower. There is no classical reversal sign, at least not in the weekly time frame, but we can see that the Magnificent Seven has been lagging behind the overall market, and the latest sign of trouble is when Nvidia reported a good set of earning report, but its share price actually tanked 8% following the release of the report. So that is not a good sign, if you ask me. Okay, so on the daily time frame, you can see that the daily time frame, you can see quite severe sell-off, and this could be laying the groundwork for further losses in the days and weeks ahead. Okay, so by and large, you can see that a counter trend is currently in place. The dominant trend remains very, very, very very bullish, Friday, we do have a strong closing on Friday, but it's possibly not enough to reverse this counter trend. What we probably will see, the market will consolidate. If the market does goes back to 6,080, that could be a good place to consider looking for signs for reversal and participating on the counter trend here, which is likely to go lower below the most recent low this week at 5,835.2. Okay, so there we have it. The S&P 500 is definitely a lot weaker than the Dow Jones. Then in the Nasdaq, which is the current laggard in the major equity index, the Nasdaq 100 is definitely coming under a lot of pressure. We can see that the monthly time frame remains very, very positive, but we do have a negative closing this past month. Okay, in February, this market has actually gone to a brand new high, but closed lower. Technically, that is can be classified as a potential reversal on the monthly time frame, and this could be the market to watch going forward. Brand new high, but close week below the previous month opening price. So this is a giveaway. So when we look for possible reversal sign, we want to look in a lower time frame. And now we take a look at the weekly time frame. This is the weekly time frame. You can see that that was the week before all-time high. This week itself, we have a closing which is actually lower than the previous 6 weeks. Okay, which is not a good development. Okay, so this is potentially a market in which I think the correction will be more pronounced. When we look in the daily time frame is actually quite dire. We have very, very sharp sell-off. And this is pointing to the possibility if any kind of rebound do comes in and it can trace back to 21,800, that will be a great opportunity for those who have not already sold to look for possible entry on the short side with the idea that this is part of a potential corrective move in a very strong uptrend. Okay, so I do believe that this may actually last all the way to perhaps May. Okay, so over the next 2 months, it could be quite a bit of a gyration in terms of prices in the equity markets. So again, higher to sell for now. Okay, and the highest traded so far is 22,236.3. Now, when we look into Europe, Europe is actually exhibiting strength as far as the DAX is concerned. This is the German DAX. Let me show you the monthly time. The German DAX is very, very, very strong. Okay, so we can see that the German DAX, which is a reflection of the Germany's stock market, does appears to be relatively strong. Okay, but everything is relative. We will have to see what kind of policy the leaders of Europe is going to come up. Now we understand that the new government is not in place just yet. They have just gone through a election at on the last day on uh, on the 28th. Okay, so we now on the 23rd, sorry, and now there is a winner. Frederick Merz is going to be likely to be the new chancellor, and we will have to see who he partner up with because he does not have a clear majority, and we want to see what his policy are. Whether or not he will continue with the previous chancellor economic policy remains to be seen. But what we do know is that he is advocating pivoting away from United States because I think Germany wants to lead the whole of Europe and take a more independent course. Okay, and we will have to see whether that will invite hostility from Donald Trump and which is very, very possible. So whatever the case is, I think everything will be based on actually what happened in Ukraine. Okay, so my fear is that the war in Ukraine will actually evolve into something more serious with the involvement of physical troops from these major European nations, and that will actually change the character of the war that's ongoing for the last 3 years. Okay, so this is the monthly time frame. Germany DAX does appear to be strong, and but on the weekly time frame, you can see that the week itself ends as an inside bar here, and which is not a good development because the week before we have a fresh high in the DAX at 22,926.5. Okay, but this week there was an attempt to go higher, but it was a half-hearted effect, and we can see that it closed as an inside bar. Now, inside bar can go both ways. It could be part of a continuation, uh, trend favoring upside, or it could also be a possibility of a reversal, especially if this coming week result in this index closing below the previous week's closing price of 22,177.1. Okay, so that will be the trigger point as far as I'm concerned. If the market in the coming week close lower than this price over here, it does has the potential to reverse. Okay, and that could start a series of events that may see the European equity markets catching up with Wall Street, which is really a little bit shaky. Okay, so this is the weekly time frame. I want to show you the daily as well. Daily, we have a bit of a rebound after initial registration of a new high. The highest traded on Wednesday was 22,831.8. Okay, so we will have to see how things pans out here. It could be a very small correction below the 22,114. But then again, I think there is a possibility of a more meaningful correction. Okay. And over in Euro stock, which is a combination of French and German stock, which is also quite reflective of the situation we are seeing. It does reflect the same thing that we are seeing on the DAX. So here we can see that the Euro stocks here appear to be strong with a brand new high in February, okay, at 5,544.1. So we can see a new high has been traded in the Euro stocks. That could be also in sympathy with what we are seeing in the DAX. Now, we want to look for sign of weakness. We will look at the weekly time frame. This past week, we do not have brand new high. This high was actually traded the week before, and this week itself, it did not end as an inside bar like the DAX, but here we can see that the market has stopped going higher. So there appears to be some kind of resistance overhead. And let's take a look at a daily time frame. If there's going to be a pullback, it will be seen in light of a corrective pullback on a very, very strong market here. Okay, here we have Friday strong closing. Okay, what appears to be a three wave, possibly targeting 5,231.3. This will be the Euro stocks. I am personally of the opinion that European stocks are overvalued relative to Wall Street. So we want to see the divergence here. And over in Asia, we'll take a look at the Nikkei 225. Now, Nikkei is obviously struggling. It has been struggling for quite some time now. We can see that the Nikkei has not been able to close meaningfully above 40,000 for months now. For the last 6 months or so, we can see that the Nikkei 225 has been trying to stay above 40,000 mark, but it has tried many times, but never once managed to close above 40,000. So that could be a warning that the market is again having heavy resistance above 40,000. And this week we can see the market actually come off and close at the lowest price in the last 9 months. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months. On a close basis, this is a very, very weak closing on a monthly basis. So this is suggesting that the underlying strength in the Nikkei is not as robust. We can see that the market has closed rather low at 37,580, I think. Okay, so this is the closing price. And on the daily time frame, again, this is a very strong market, but again, we can see that the market is now experiencing a little bit of weakness. Now, what's interesting about this chart here on the daily time frame, there is this line that I have drawn, which have basically supported the market for quite some time, but the market actually broke through this support line, which is for the first time last week. Okay, last Friday we saw this market actually took out the support line, and there was attempts to go back into the support line here. Now this line here has turned to become a very persistent, we call it resistance. So we have Nikkei trading as low as 36,827, although the market closed strong, relatively speaking, but it's still close weaker than its opening price for the week. But this is potentially a reversal signal. We will have to see how this thing pan out. We have a three-wave pullback from the high here at 40,608. Okay, if this is good, marks the end of a reversal, then the market may actually go higher. And the key here will be watching for reaction at 39,822. Okay, if the market go above here and close above this level, which is this level over here, then obviously the correction is over and the market is due to continue charging higher. Okay, but for now, this resistance turn this support and resistance is going to be the key to whether any kind of rally will be sustainable or not. Okay. So let's take a look at Hong Kong. Hong Kong has been doing very well until this week. Okay, so Hong Kong has been moving relatively strong. Okay, ever since we have the story of DeepSeek, which is the AI startup from China that has actually surprised the tech AI company in the States. And we can see that this past month, we can see the Nikkei has actually have a very strong surge to above 24,000 briefly before closing just under 23,000. So we have a bit of a move here in the Nikkei, in Hang Seng, which previously is part of a three-wave rally. Okay, there was an initial three-wave rally that actually picks out here. Okay, in October last year. Okay, then we have a period of pullback, and this is followed by 2 months of very solid gain in the Hang Seng, largely led by the tech sector. Okay, so again, we can see that the market may be resuming its a rally. And again, we also have to watch how China is going to come out with any kind of stimulus package or any kind of retaliation against the additional 10% tariff imposed by Donald Trump this past week. Okay, if there is going to be something substantial, it will be adding to the fuel to actually fuel this rally in the Hong Kong market. Okay, so we can see Monday we have a bit of weakness going forward, but nothing to crow about. This looks like to be a series of rally here with higher lows along the way. Okay, this has been the case for the last 6 months, in which you are seeing higher and higher low and higher high. So for this phase itself, it does suggest that maybe there's a little bit more to the upside, and the key level to watch will be at 26,769. Okay, so on the weekly basis, if this market take out this level over here, it may suggest that the downtrend, at least for now, will be over, and the market is looking to rally even higher. On the daily time frame, I want to show you the daily time frame. We can see that on Thursday we have a bit of a spinning top here. It's not exactly a very neat spinning top, but it does have a new high for the year, and it closed weak and followed by another day of losses on Friday. So we can see that near term we could be experiencing a little bit of profit taking, and again, this additional 10% tariff on China is not a very welcome news. So the market is just being cautious. They want to take some profit off the table and wait for China to come out with countermeasures. If there's going to be very robust countermeasure, and if that is being bought by the market participant, it could actually see this Hang Seng here resume its climb. Okay. Right. I'm done with equity markets. Let me take a look at the currency market. As usual, we will look at the euro dollar. Now, euro dollar has been doing relatively well until this week. Okay, this is the monthly time frame. Okay, for the last 2 months, we can see that there were attempts in the euro dollar to actually rally on the back of weakness in the dollar. But I think going into the PC number of Friday, the market actually decides that the dollar is going to firm up, at least in the immediate future. Okay, so hardly any new low was traded in the euro versus the dollar. The overall time outlook in the euro dollar is definitely very bearish. Now, this is the outlook for the euro dollar, a high of 1.6, and now we can see that this is technically a very bearish market. And technically, what it also means that the dollar is going to be looking to be very firm. And I think if it gels in with the narrative of capital flight to the United States, we have been seeing that for quite some time, especially in the gold market. And if there's going to be any escalation in the geopolitics, I think the instinct of investor is to move their equities and their wealth into a safe haven, which is currently the United States. Because during World War I, World War II, we see massive capital flight into the United States because US was never involved in the war itself until the very late stages in World War II. Okay, so that left American industry very much intact. So I think the same thing is playing out right now. There's a bit of uncertainty in geopolitics, and we are beginning to see capital moving westward to New York. Okay, so this could be a situation that will actually play out very well for the dollar, meaning to say I am positive on dollar in the long term. And what we are seeing over the last 2 months, in which we see a bit of a weakness in the dollar, is actually just temporary. Okay, and in the weekly time frame, we can see that the last 3 weeks, I was hoping for a three-wave bounce. The three-wave bounce means to say that I was thinking that it will be able to take out this high here, which is 105.33. It came very close. The high traded this past week was 102, 105.29. Okay, not quite. Okay, meaning to say that it does not appear to be playing out the way I thought it would. We have very strong rally over the last 2-3 months. In fact, for the whole of February, it does appear that the euro may actually be bouncing a bit higher, but I suspect that it wouldn't be very much higher beyond 105.60 plus. Okay, but this time it does not even manage to go above 105.30, okay, which is a bit of a disappointment. Market closed at 103.76, which may point to lower rates going forward for the euro. So if the dollar strength is able to be maintained, we are likely to see maybe the end of the decline in the dollar, at least for now. Okay, in the weekly time frame, show you the weekly time frame here. Here we have a bit of consolidation. You can see this is part of that move, right? Okay, did not quite pan out. I'll show you the daily time frame. So this is a daily time frame. You can see that there's a very solid red line that I put across my chart here, and the fact that Thursday the market closed below this red line here is signaling to me perhaps the rally that we see here could be ended. Okay, I was hoping to do something at 105.60. Okay, did not quite happen. So we have 3 days of weakness in the euro versus the dollar, suggesting that if this thing accelerates below 102.10, we will be seeing the resumption of the bear market. Okay, right now we go into the sterling. Do you have any question for me? And if you do have, do put them into the Q&A so I can address them. Now we can see that the sterling did slightly better than the euro dollar. We can see this is the monthly time frame. Overall, the trend is down. We have a bit of counter trend here, which is possibly not ended yet. Okay, which is kind of a surprise because the euro dollar is a lot weaker than the sterling right now. Okay, so yes, on a month-on-month closing, the sterling actually closed positive compared to January, which is not the case for the euro versus the dollar. On the weekly time frame, we are also seeing this playing out. Okay, what is the weekly here? Now, on Friday, this week itself, we have a bit of a pullback, but it did manage to go into a high for the last 2 months. Okay, so the high traded was 127.16 and it closed at 125.71. Okay, so again, this is part of a bounce, possibly because this bounce here has already done a three-wave. You can see the low here to the high here, to the low here, to the high here. This is actually a three-wave bounce. And if the market do take out 118, for example, and this could signal the end of the rebound and the continuation of the higher time frame downtrend. Okay, do watch out 1.18. On the daily time frame, the market is definitely struggling above 127, and this is actually an area where it is quite vulnerable for selling interest to reappear, in my opinion. Okay, we have a three-wave rally, hit equality, and then a little bit more. Okay, you can see that there's a three-wave rally here, very clean, and this suggests that the bounce here is over and the market is likely to trade lower in the coming days. Okay, so the fact the market do sell off quite a fair bit of Thursday, setting the stage for lower prices, that is something to watch out. Okay, so between euro dollar and sterling, I think the dollar is suggesting to us that it is coming back. Okay, and try not to sell the dollar in the coming days if you have to make a trade in the currencies. Okay, so let's take a look at the dollar versus the Japanese yen. We can see the same thing. The dollar versus the yen remains possibly under a little bit of correction. Okay, the yen has been pretty strong for the last 2 months. In January, we can see that after hitting a high of 158.87, it has been coming down. Meaning to say that the Japanese yen has been strengthening against the dollar. Okay, so that was the mood for January and February. So it's nothing new here. But what we want to see is whether we can see sign of dollar strength in the Japanese between the dollar versus the yen. Okay, no, this could be part of a corrective move, which may still favors lower dollar rate against the yen. And this is understandable because market participants are definitely looking forward to the Bank of Japan hiking interest rate, and that should be favoring the yen, meaning to say dollar yen may have some more room to trade to the downside. Okay, again, we are not seeing the dollar strength very significantly in the dollar versus the yen pair. What about the daily time frame? Okay, which is not much to see here. We can see that the dollar has been weakening until this Tuesday here. Okay, Tuesday market hit the bottom at 148.56, and it has been seeing 3 days of strength in the dollar. Okay, it means to say that the last 3 days, that ends on Friday, we see dollar strength coming back into the marketplace. This could be preliminary, but we will have to watch from the other currency pair. What about dollar Canadian? Dollar Canadian, this is the monthly time frame. We have a high here at 147.84 for the month of February, but the market, after trading a high, has been closing lower. So the first sign of trouble could be the fact that the month of February ends lower than the closing price in January. So that could be the first sign that this strength that we see in the dollar versus Canadian may be in a little bit of trouble. Although chart-wise, the momentum is still very strong. Okay, overall the momentum is still very much in play. In the weekly, you can see that the weekly time frame saw massive strength in the dollar this past week. Okay, this was, of course, at the beginning of the month of February. We can see the market after achieving a high here at 147.95. Okay, saw a massive sell-off, and this has been compensated by the counter rally that we saw this past week to a high of 144.72. Could this be a sign of more strength in the dollar going forward? Quite possibly, because the closing price this week is actually near the top of the range. Okay, meaning to say that there could be follow-through buying in the early part of the week. So again, this could be a sign that the dollar is coming back quite actively in the dollar versus Canadian pair. What about the daily time frame? Yeah, the strength is quite clear over the last few days. You can see every consecutive day for the last 6 trading session, the dollar versus Canadian has been very, very strong. So there is momentum over the past week itself, likely to see higher prices, at least in the first half of the week. Okay. Then let's take a look at dollar versus Swiss francs. I don't normally look at this pair, but I just want to get a sense of where the market is heading. Now, we are not seeing very robust demand for dollar here, although the dollar has been strong over the last few months. You can see that except for this month, except for the end of February, the dollar versus Swiss franc has been closing positively every single month for the last 4 months. Okay, that means to say January, December, November, October onwards, we see that we saw that the dollar has been relatively strong, and it's only started to show weakness in February, because the February close lower than the opening price in January. So this could be signaling to us that the dollar strength is may have lost a little bit of its momentum. So we do get a bit of a mixed picture here. Other than dollar Canadian, we are not seeing very obvious dollar strength in the other currency pair, other than the euro versus the dollar. Okay, so again, we can see dollar Swiss on the weekly time frame. We have a very possible triple top here. Okay, so right now the market is getting a little bit cautious in pushing the dollar versus the Swiss franc rate higher. Okay, not very conclusive, but overall, we can see the dollar strength very, very clearly in the euro versus the dollar pair, as well as the dollar versus Canadian pair. Now that being out of the way, let's take a look at the gold market. Gold actually came off a little bit this past week. I think there's a new question here. Davey is asking, with anticipation of Japan interest rate going up to 1%, will there be another carry trade issue? How will the Japanese yen go forward towards the year end? Now, I think the Bank of Japan has learned its lesson. Now, remember last year when they started to intervene in the currency market, and also at the same time, high interest rates from negative territory to zero, just to zero, the market was traumatized in the sense that the unwinding of the yen carry trade, which is very massive, nobody really know what is the size of the yen carry trade, and that was because the Japanese bank, the Bank of Japan, did not communicate to the public as to what it wants to do. So you can see this time around, they have been a little bit more transparent in its forward guidance, and they have been telling the market ahead of time that they are looking to high interest rates all the way to 1 percentage point by the end of this year. So they is serving notice to the marketplace. So I think this time around, the yen carry trade may not be as eventful because there is no surprise here, because they have already forewarned the market that they are looking possibly to high interest rates. So there is no surprise here, unlike the last time when they intervened in the currency market and then also subsequently follow up with an interest rate hike. Okay, that means they have actually reversed their monetary policy, which has been in place for decades. Okay, so I think the initial impact has been worn off. Okay, so I think now they are a little bit more circumspect. They are definitely warning the market ahead of time. So I do not think it will be as major as an issue compared to the last time they did something similar. Okay, I hope this answers your question. Now, in the gold market, we can see gold on the monthly time frame has had an all-time high. Okay, in the COMEX gold futures, definitely it has already traded above $3,000 per ounce. In the OTC market, which is what we call the London Bullion Bank interbank market, you can see that gold traded in the spot market was $2,956.20 per ounce, and it pulls back. Now, this pullback may not mean anything just yet. Okay, we have to see the lower time frame to see if there's any conclusive signal to suggest that a top is temporarily in place. But I do think that with the issue on Ukraine still lingering, it will be safer to be long gold than to try to catch the counter trend. Okay, so if we do have a chance to buy gold at lower prices, I think we should consider it very actively, because going forward, it does not appear to me that Donald Trump can actually get a deal for Russia to actually end the war. Okay, because I think the European players are definitely not in favor of ending the war just yet. Okay, so that could complicate matters. I mean to say, if, like I said earlier on, if the European troops actually sent into Ukraine to physically participate in the war, it changes the dynamic of this 3-year war, 3-year-old war with Russia. Okay, things could get really nasty going forward. So if that's the case, I think there is scope for the precious metal to actually gain more. Okay, right now I think the magic number is 3,000 per ounce, but once the market get used to go at around $3,000 per ounce, eventually the glass ceiling will be broken and people will be more comfortable taking gold even higher beyond 3,000. That could set a new floor for gold market going forward. Okay, so going forward, I think if the opportunity arises to buy gold on the dip, I think we should actively consider. Okay. Then this is the weekly time frame. I want to see the weekly time frame here. Now this week, on a technical basis, it does look bad. Okay, we have an all-time high in the spot market at $2,956.20, and this bar here is actually quite detrimental. Technically speaking, this is a reversal pattern because this is an outside bar. Okay, this is a bearish engulfing bar, meaning to say that it could set the stage for much lower gold prices going forward. So going forward, there is a choice whether you want to take profit on your long gold position if you have any, and to wait for the correction to set in. Okay, personally, I think selling gold will be very risky. Okay, I just hope that if there's going to be a correction, prices can come down to a more sensible level for me to pick up some bargain along the way. Okay, because I am long-term bullish on gold. So again, this is a technical reversal signal, a two-bar pattern. Okay, suggesting going forward, technically the market may be more likely to come down. And we look into the daily time frame. This is the daily time frame here. We have seen out of the 5 days this past week, Monday started off on a very strong note, and then on Tuesday it lost it. On Wednesday, it just barely hold on to the market itself, and then followed by 2 more days of sell-off on Thursday and Friday. Okay, so this could be something that we want to see, and also this come on the back of a somewhat stronger dollar. And if the dollar is strong, we all know what is the relationship between the dollar and precious metals. It will go lower. Okay, so all said and done, I think the market could be due for a quite sizable correction, and but again, we will have to see because the market is so long gold. Okay, if the market starts to come off, those people who are hesitating to take profit will now have more incentive to do so. And if that attracts new player into the market, hoping to catch the down move, okay, that may see a quite a bit of a sell-off going forward. There's a couple of new questions here. Sam is asking how long gold can go in this retracement. Now, just looking at the structure here, we are possibly at the very early part of a possible correction here. The nearest bottom is over here on a daily time frame. Okay, so this could be acting as a guide for us. This low here is $2,536.81. Okay, this is the low here. This is another low. So between these two low here, it could provide us with some kind of idea where the demand is. Okay, here the low here is $83.03. $83.03. Okay, so this area here, I will highlight for you. Between this low here and this low over here, this could be area of potential demand. Okay, so if you believe this is the case, if and when price do come into this bracket of prices, okay, between the low here $2,536.81 to $2,583, I think the area here could be possible where the market may finally rest. If that's the case, we are looking at quite a severe drop here of about maybe $200 per ounce. Okay, hopefully that is the case because I still want to buy. Okay, right. Bok Song Lim, Aussie dollars. Okay, thank you very much. I have not covered Aussie dollars. Okay, this is the outlook for gold. I think technically there is a possibility that gold may come under a bit of a selling pressure at the start of tomorrow's trading. Now, for Lim here, I will go back and cover the Aussie dollars. Now, Aussie dollars cannot operate in a vacuum. It has been very, very weak. Okay, although there was an attempt to rally, but by the end of closing on February, it did not close much better than the closing in January. So it's a bit of saying that the bounce in the Aussie does not look over because I don't get a classical three-way bounce. Okay, and this could be setting the stage for lower prices at least immediately if the dollar strength continues anywhere between this low here that we see, okay, which is 55 cents all the way to 59 cents. That could be an area to pick up some more long position, but look for confirmation in the lower time frame. This is the monthly one. So if the price do go lower between 55 to 59 cents, that could be a good area to pick up some more long position for the continuation of this potential three-wave bounce. A target could be about 86 cents. Okay, so if you manage to buy at 55 cents, 86 cents is quite a fair bit of a move here. Okay, so this is the technical outlook for Aussie, but the Aussie does look weak. Okay, because the bounce has not been very sustainable. Then in the weekly time frame, Friday, this week itself has seen the Aussie lost back quite a bit of ground. Okay, for the last 3 weeks leading to this week itself, we can see that the Aussie dollar hit the bottom of 60 cent and 0.6088, okay, and bounced all the way to 0.64, but it lost it all by more than 50% this past week to trade to a low of 0.6192, which is quite a bit of a sell-off. So that set the stage for lower prices in the Aussie going forward. So this is the weekly time frame. The market is exceedingly bearish because the lows are getting much lower. Okay, and the low here that we saw here is also lower than the previous known low. Okay, on the daily time frame, this is the outlook. At the get-go this week, the market has been coming off. Okay, so it did not point to a very strong sentiment in the Aussie dollars, and this is also another currency pair that also is very clear as to the strength in the dollar. Okay, so again now we have all euro versus the dollar and dollar versus Canadian, and now we see in Aussie versus the dollar, all suggesting the dollar is quite strong, at least against these three currencies. I think there's another question here. Anonymous, could XRP rebound past $3? I will come to that when we talk about crypto. All right, now let's take a look at silver. Going forward, I think there is a good case for pivoting to silver, because silver has not really rallied in any major way. There was no new high traded in silver. In fact, we have seen silver done the three-wave bounce. Did not quite hit the ideal target, which is $36, because this is the equality move, like AB equal to CD at $36 per ounce. The highest traded was $34.85, and then it started to struggle. Okay, so going forward, we could be possibly seeing a new pattern evolve, and I do not believe that this is a persistently downtrend. Okay, and I think that if I'm bullish on gold, eventually the view will also apply to silver. So I'm looking perhaps as a relative play to actually look more to silver rather than gold, because gold has actually gone up by quite a fair bit. Okay, silver is lagging behind, so there could possibly be some kind of a relative advantage in picking up silver rather than gold. Okay, but again, we all look at prices, right? Those prices, unless they are hit in the gold price bracket that I just shown you earlier on, then maybe silver could be somewhere we can also consider. Okay, so yes, market has done a three-wave bounce, not quite equality, but there may be some more room to the upside, because silver does not seem to be following the same pattern as gold right now. So this is a monthly. Let's take a look at the weekly. 3 weeks, the market has been struggling. You can see prior to this week itself, the market has been very, very strong, at least on a closing basis. Okay, the week before last, there was an inside bar. Market traded a high of $33.38. Then the week that followed did not quite manage to pick out the new high, and it ended up as an inside bar. But this past week has saw a resolute profit taking in silver markets, maybe as a spillover in the gold market. So going forward, we could be seeing immediately lower prices in silver, suggesting this three-wave pullback A, B, C, okay, targeting maybe $27.39 per ounce, okay, which is also not that far away from this swing low here at $26.40. So immediately, I think there's a case for lower prices in silver, since gold right now seems to be under a wave of profit taking on the back of a stronger dollar. So technically speaking, it does favor lower prices, at least immediately. In the silver, sorry, in the daily time frame. So this is a daily time frame here. We can see that it traded to a low at $30.81. Attempt to bounce, but on a close basis is still very weak closing. So all said and done, this three wave that we are seeing here has not fully played out. And if it does play out in this A, B, C, D, is targeting $27.30. Okay, possibly. All right, gold. Let's take a look at oil. Now, the oil market has not been doing very much of late. It has been hovering. There was an attempt to rally, okay, but last month itself, the market did not end on a very strong note. It traded to a high above $79.35, but that was once, and then it has lost back everything. So I think we still have to wait for some time for the gold, for the oil market to stabilize. I think there could be possibility of further consolidation, but I think overall the bull trend is very much intact. Unless crude oil, the WTI trades above $57.63, I am still favoring going long on gold, but it will take a little bit more time because the market has no momentum to the upside. Okay, so it is going to be a long-term play for me if I am able to reposition long. Okay, now I'm going to be very cautious because maybe we can see better pricing going forward. But I'm still going to look for possibility of going long in the oil market. The last few outing for me has not been very successful. Okay, so we want to see if prices of WTI crude oil can go back to somewhere around 65 cents. Okay, that will be a much better place to anchor in because that will be the 88% retracement of this entire move here. Okay, so I want to see if market have the possibility of coming to test $65 per barrel. If that is the case, that will be good because I think the long-term play in oil, okay, is still very positive. And in the daily time frame, we are not going to see much because you can see the market has not been able to rally significantly. There was a bottom here at $68.28, and since then the market has been trading higher. It traded to a high this past week to $70.32 before losing it and closed below $70 per barrel. So long-term bullish on gold, on oil, but I think we may be able to get a better pricing going forward. Hopefully, near to $65 per barrel. Now we go to, I think there's a couple of questions here. Let me grab the question first. Rosabelle is asking, do I, or I can't show you the ringgit versus the Aussie. Rosabelle, if you're going to show up, I understand that you are interested to show up for the physical seminar in KL. Maybe when you show up, I can show you the chart from TradingView. Okay. But for now, I don't have any chart to show you on the ringgit versus the Aussie or the Aussie versus the ringgit. You must have kids studying in Australia. That's why you want to know where the Aussie is heading. Okay, like I said, if you are able to show up for the seminar in Kuala Lumpur next weekend, maybe I can actually show you the chart on TradingView. Okay, let's go forward and talk about crypto. And crypto has a horrible week this past week. Okay, on the monthly time frame, you can see that the Bitcoin have a massive sell-off to as low as 78,252, which is a very far away from the all-time high of $109,567. So it has saw quite a severe pullback. Okay, but it does not change the character of the long-term outlook in Bitcoin. Bitcoin is still very bullish. Okay. Okay, here you can was hoping that it can target 125 this month. Okay, so I have previously put out a note here that there's a possibility we may see Bitcoin trading to 125,000. Okay, we are still in the early days of March, not sure whether this will result in a return of the bull. Okay, but for now, this past week has been quite severe. Okay, we will have to look for clue in a lower time frame. Overall, I'm still very bullish on Bitcoin. We have a three-wave pullback from all-time high of $109,567. This is three-wave. First initial wave, followed by a bounce and then followed by another leg. Now, this move here looks like an equality. Okay, what I mean here is that it does look symmetrical. Yep, we have symmet we have a symmetrical move here. Okay, not exactly correct, but I can see that. Okay, the equality of this three-wave pullback is at $81,083. Market overshot by a couple of $1,000, and now on a closing basis, as of now, is trading at about $85,869. $85,869. Okay, so we do have a bit of a bounce on a close-to-close basis. We do see the completion of this very simple three-wave pullback. Now, let's take a look in the daily to get a better sense. I'm sure we can see the same thing play out here. Okay, the three-wave pullback I mentioned is this all-time high here to this over here. Okay, so we can see that it did overshoot by a little bit, but it is within allowable range. Okay, and this is very strong. On Friday, when we have the low here at 78,000, we can see that the market have a very strong bound. Now, this is technically a very strong reversal. Yesterday did not see any major pullback. So there is a possibility we may see a low for this move already because it fills in very neatly. Three-way pullback followed by a reverse, very strong reversal signal. So going forward, we could be seeing higher prices. Isn't that good news for those who are into crypto? Okay. So technically, I think Bitcoin may have hit an immediate bottom. And what about Ethereum? Now, Ethereum is the largest altcoin, so it also has some impact. But Ethereum has been moving independently of Bitcoin for quite some time. There was no new high traded, unlike in Bitcoin, right? So we can see this week the sell-off in Bitcoin has also spilled over into Ethereum, and the month of February has ended up relatively negative. It is at the lowest closing price since December of 2023. So this is a 1-year low, okay, a 14 months low. So that on a monthly basis will put a little bit of a dampener into the Ethereum. The dominant trend in Ethereum is bullish. This pullback here is relatively sharp, okay, and if this Ethereum pullback ends as a three-wave, it could be challenging the low here at much lower prices. Okay, so I do not expect it to go back to, let's say, $100, but at any rate, we can see that the low here is $885. This low here may be challenged at some point because the structure here looks very different. Weekly time frame, we can see that the market has been doing this, right? So if this end up to be a three-wave, a larger three-wave from this high here, we could be looking at, oh, we have hit equality. Imagine that. Okay, so we can see a high, a low, a high, and equality is just above the low that we saw this past week. The low is $2,075. I think we can get a better picture in the daily. Yeah, let me do this to get a better picture. Right, you can see equality is almost at $2,110. Market went down, but there is no reversal pattern in the daily time frame. There is one that suspiciously look like a reversal pattern, but it's not strong enough. Okay, this is followed by an inside buy yesterday. So what happened going forward if we do get a situation uh, in which we have a strong closing above here? Okay, if we get a strong closing above this price here at $2,281.54 and close above here, then we have something to go with. for time being, there is not very strong evidence that this is a classical reversal. It does look suspiciously like one, but it's not very strong. Okay, but the clue here will be if we do have a closing in the next few days above the opening price here on Friday, which is $2,281.54, then we have that trigger, the reversal buy signal here. I want to talk about Ripple. I have been very interested in Ripple. Many times I keep on mentioning, if you can buy below $2, it will be a bargain. Okay, so this is Ripple right now. This is the monthly time frame. Market hit a low of $1.99. Okay, and then bounce. So this is February. So this is already March. So this bar here represents the 2 days of trading in March. So last month in December on Friday, we see the price go below $2 very briefly. Okay, and here we want to take a look at the weekly. The overall trend remains very, very strong. Okay, on the weekly time frame, $1.77 was the low. This past week was at $1.95. So it was briefly below $2. Very good pricing if you want to look to reposition long in the Ripple. So I'm still going to maintain my overall bullish outlook for Ripple. Not sure whether we're going to get another chance to buy at or below $2. It's still very tentative because this is the weekly time frame, and for now we only have one bar. Okay, let's take a look at the daily to see if we can get any kind of sign. The last 48 hours seems to suggest. Now, this is a classical reversal signal. Now, there is also happening to have another solid red line here, which is used to be capping this round, especially during this phase here. You can see the market actually was kept by this line, right? Then there was a breakout and a close above this line. The market went up and then pulled back down, okay? Way back into this red line. But on a close basis, it did not. This bar itself is very significant. It is a very bullish reversal pattern. And this is followed by a subsequent pullback. And this is another reversal pattern. Of course, at the end of last Sunday, we saw another reversal pattern, but it did not quite work out. But unlike this pattern here, which is a reversal pattern, the following bar did not close above the opening price. Okay, this one is different. This one, we have a reversal pattern here, and then we have this bar here. Yesterday, we did not have a very clean closing above this bar opening price, but today, assuming it closed about current price, which is $2.25, I think that will be the trigger. I think the market may have already found a bottom in Ripple. So go further, I think I am more bullish on Ripple than the other two coins I've just shown you. Let me see if there's any further question. Yes, Lim is asking Solana. Okay. Now, we all know Solana has been very popular for the launching of meme coin, right? And meme coin has been taking quite a bit of a beating, okay? So it has also spilled over into Solana. So Solana traded to a high of $295.32, fall back down to $125.29. And this is where it is currently trading at $141.30, I believe, okay? So we can see that underlying trend is bullish. We have a counter trend here that's actually accelerated this past month. Okay, now we want to look for clues as to whether it has found a temporary bottom. If Ripple is any guide, maybe the overall possible bullish reversal may actually spill over. Now, this is signal that the market is overall very bullish. The underlying bias is definitely very bullish. We have pulled back to as low as $125.29, and notice that the price dipped into this blue area here, which is what we call a very deep retracement. To me, that is the best place to, if you still believe that the market is bullish, this area where it's colored in blue is a relatively cheap place to pick up buy position if you're going to maintain the overall bullish outlook, which I am. Okay, and price has hit into the 6% retracement, which is very, very deep. Okay, and imagine if you have bought somewhere around where the price is right now. Okay, and just put a stop below 109. That will be your risk, because if this bullish outlook remains positive, eventually over time, there's possibility we may see price rally back above $300 per coin. So where prices is right now is actually quite affordable. Okay, and on the daily time frame, let me see if there's going to be any better signal. So this is the daily time frame. Now this bar here is okay on balance. I think it's quite strong. Okay, but you can see on the close basis, there is no one bar that managed to close above the closing price here. Okay, which is going to be $147.29. I need one bar, another bar to close above this level here, which is $147.29. So Saturday we did have higher prices above this level, but not quite on a closing basis. Today is still very tentative. Hopefully over the next few days we get a bar that ends and close above this level, 147.29. Then we have the classical trigger to actually go in the buy, because happening within the blue area is already quite a very competitive levels to consider, because the overall trend is still very, very bullish. There is another question, I believe. Okay, thank you very much, Lim. So there you have it. For those who wants to come for the talk, I want to show you that slide one more time. This is the slide. Can you see it? Hopefully you can see it. Any other question before we end the session for this evening? And just know that I'm currently in Kuala Lumpur. For those who are stationed in and around Kuala Lumpur and wants to meet up for coffee, I am more than happy to meet up. Just send me a message. Okay, guys, if there's no further question, thank you for your time, and I shall see you next Sunday at the seminar. And follow, of course, the weekly market rep will continue. I will finish that seminar by 6 p.m. and I will get ready to also do a webinar for those who are not able to show up. All right, guys, thank you very much for your time. I'll see you next Sunday, hopefully physically in Kuala Lumpur. Bye-bye.